Welcome to Earnings Central. In this video, we'll break down Zoom's fourth quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $1.3 billion. The company actually reported revenue of $1.4 billion, surpassing expectations by 8.5%. However, this quarterly revenue marked a 0.7% decrease compared to the $1.42 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was $1.18. The company actually reported an EPS of $1.19, exceeding expectations by 0.8%. This result also reflects a 3.5% increase compared to the $1.15 per share reported in the same quarter last year. Now let's dive into some additional performance metrics highlighted during the earnings call. One of the most promising metrics was enterprise revenue, which grew 6% year over year and now makes up 60% of Zoom's total revenue. This is up 2 percentage points from last year, showing Zoom's continued shift towards serving larger customers. Free cash flow was another bright spot, growing 25% year over year to $416 million. This represents a free cash flow margin of 35.2%, demonstrating Zoom's strong ability to generate cash even while investing heavily in AI and new product development. For the full fiscal year 2025, free cash flow grew an impressive 23% to $1.8 billion. Zoom's profitability metrics also look solid, with non-GAAP operating margin improving to 39.5%, up 81 basis points from the same quarter last year. This margin expansion is particularly notable given Zoom's continued investments in AI, platform development, and emerging growth businesses. Looking at future revenue indicators, deferred revenue grew 7% year over year to $1.35 billion, outperforming the company's own guidance of 5 to 6%. This suggests stronger than expected advance bookings and renewals, a positive sign for future quarters. Enterprise customers contributing more than $100,000 in trailing 12-month revenue grew 7% year over year. These high-value customers now account for 31% of Zoom's total revenue, up from 30% a year ago. This metric highlights Zoom's success in landing and expanding relationships with larger clients. Finally, Zoom is seeing significant stabilization in its online business, with average monthly churn hitting a record low of 2.8% in Q4. This represents a 20 basis point improvement year over year and is the company's lowest ever churn rate for a fourth quarter. This suggests that Zoom is succeeding in retaining its smaller customers despite intense competition. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The most dramatic trend was the acceleration in AI adoption. CEO Eric Yuan reported that monthly active users of Zoom AI Companion grew by 68% quarter over quarter. This rapid adoption demonstrates the real value that Zoom's AI features are providing to customers. Yuan emphasized that AI Companion has emerged as a driving force behind Zoom's transformation into an AI-first company. Zoom's contact center business achieved a significant milestone this quarter, securing its largest deal ever with a Fortune 100 U.S. tech company for over 15,000 agents. This major win demonstrates Zoom's ability to compete and win against established contact center vendors, even for the most demanding enterprise customers. The company noted that contact center customers with over $100,000 in ARR grew more than 100% year over year. In a major customer win, Amazon has chosen Zoom for its employees, further strengthening the long-standing relationship between the two companies. This is particularly notable given that Amazon previously used its own Chime platform. Yuan mentioned that the deal opens opportunities to expand distribution through the AWS marketplace, potentially creating a new growth channel. Zoom's employee communication platform WorkVivo delivered a record quarter, with total customers growing 89% year over year, accelerating from 79% growth in Q3. The company secured 3 deals over $1 million in ARR with major global brands. A strategic partnership as a preferred migration partner for Meta Workplace contributed significantly to this momentum. Looking ahead, Yuan announced that Zoom will launch a custom AI Companion add-on in April. This will allow customers to create custom workplace agents through a new monetized offering priced at approximately $12 per seat. This represents Zoom's first major AI monetization effort beyond the features bundled into their current subscription tiers. Finally, Yuan highlighted Zoom's federated AI approach as a key competitive advantage. This approach combines the best AI models for each specific task, using specialized small language models where appropriate while leveraging large models for more complex reasoning. This allows Zoom to optimize both quality and cost efficiency, a critical factor as AI usage continues to grow. For fiscal year 2026, Zoom expects revenue growth of approximately 2.7% or 3.3% when adjusted for foreign exchange and leap year effects. The company will focus on expanding AI capabilities, innovating within Zoom Workplace, and building upon momentum in new products like Contact Center and WorkVivo. While macroeconomic challenges persist, CFO Michelle Chong noted that they're seeing mixed but stable to positive conditions with improving metrics in both enterprise and online segments. Chong emphasized that Zoom will continue to invest thoughtfully in strategic priorities while maintaining focus on profitability and cash flow generation. Overall, Zoom's Q4 results paint a picture of a company successfully transitioning from a pure video conferencing provider to a comprehensive AI-powered work platform. With strong cash generation, growing enterprise traction, and accelerating AI adoption, Zoom appears well-positioned to navigate the continued evolution of workplace communication and collaboration. That wraps up our recap of Zoom's fourth quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.